Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. Thank you so much for joining. We're excited today to discuss Fidelity Crypto IRA Review, navigating the new Fidelity Crypto IRA offering for solo 401k holders. As always, you can find us on our YouTube channel, on LinkedIn, or on the X platform. If you subscribe and follow, you'll get notifications of when we go live. We go live twice per day, once at 10 a.m. Pacific, 1 p.m. Eastern, then we'll back again at 1 p.m. Pacific, 4 p.m. Eastern. If you subscribe, you get notifications, you can join, ask questions, etc. So please, if you have questions or topics you want to discuss, please chat over those questions or topics as we love to discuss those. But we'll dive right into today's topic, which is, again, Fidelity Crypto IRA, navigating the new crypto IRA offering for solo 401k account holders. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So Fidelity earlier last month quietly launched, so in April of 2025, quietly launched the ability to invest directly in cryptocurrency via an IRA account. So we want to discuss the features of their offering generally, as well as on the next slide, discuss how this pertains to solo 401k account holders. So the different account types that Fidelity is making available via their crypto IRA offering are going to be traditional IRA accounts, Roth IRA accounts, and rollover IRA accounts. So they've got three account types. So in those different IRA account types, they do allow you to invest directly in cryptocurrencies. So the available cryptocurrencies are Bitcoin, BTC, Ethereum, ETH, and Litecoin, LTC. Their eligibility requirements provide that you have to be a U.S. citizen, age 18 or older. Now, they do have different state residence requirements. There are 38 states at the moment. I know that they state that they're looking to add more states. So there are certain states that are not going to be available. So the majority of states are available, but there are certainly some states that are not. Probably most prominently, California is in the list, at least at the moment, of states in which an individual cannot yet open up a crypto IRA at Fidelity. In terms of fees, Fidelity does not charge any account opening fees. They don't charge maintenance fees. So their fees are limited to a 1% spread on all transactions. So in other words, both buy and sale transactions. So that's going to be a 1% difference between, right, the price that it's bought at and the price that it's sold at, and then Fidelity's making that difference. So that's how they're making fees on these accounts, or charging fees on these accounts. In terms of storage, they provide cold storage. They claim that it's institutional grade, provided by Fidelity Digital Assets. So no private wallet storage, for example. In terms of funding these crypto IRA accounts, the only way that you can currently fund it at the moment is via cash, and it has to be via a linked brokerage IRA account. So it can't even come from an external account. So, for example, if you want to fund your Roth crypto IRA at Fidelity, it needs to be funded with cash via direct transfer from another Roth IRA brokerage account at Fidelity. Likewise, if you want to fund a traditional crypto IRA account, you'd have to fund it via a linked traditional Fidelity brokerage IRA account. Now let's talk about how this pertains to solo 401k account holders. So our plan always allows for investing in crypto, right? You just need to do it you need to invest via an account opened up under the name and EIN number of the plan. So currently at the moment, Fidelity is not opening up brokerage accounts or non-prototype accounts in the name of a third-party solo 401k plan to invest in cryptocurrency. However, this still might be relevant to solo 401k account holders. So for example, if someone is eligible to transfer funds out of their solo 401k to an IRA, then that individual could transfer those solo 401k funds, the cash, out of the solo 401k to a brokerage IRA at Fidelity, like a traditional IRA, a Roth IRA, or a rollover IRA brokerage account at Fidelity, step one, and then move the cash from that brokerage IRA account at Fidelity over to the crypto IRA at Fidelity, and then invest in cryptocurrency via that applicable crypto IRA. So notice I said that if you're eligible to transfer the cash out of the solo 401k. So when would you be eligible to transfer cash out of the solo 401k? Well, generally, you have to meet a triggering event. For example, being age 59 and a half or older. But there are certain exceptions that apply, and the rules can be a bit more complicated than that, but that's the general concept. So, for example, what are some of the top exceptions? Well, money that you rolled into the plan from a previous or another retirement account. Like let's say you rolled in money from a traditional IRA into your pre-tax solo 401k. Or let's say you rolled in money from a former employer plan to your solo 401k. So money that you rolled in can be rolled out at any time. You don't need to meet a triggering event under our plan documents to be able to roll those funds out. So those funds can be rolled out of the plan to an IRA, a brokerage IRA account at Fidelity, right? Because you can transfer money from external plans to a brokerage IRA at Fidelity, step one. And then step two, under these crypto IRA rules that Fidelity set up for their own Fidelity crypto IRA, you could then transfer the cash from the brokerage IRA at Fidelity over to the crypto IRA at Fidelity and then invest in crypto in that fashion. Another exception is going to be voluntary after-tax solo 401k funds. So under the rules, you don't need to meet a triggering event to be able to transfer voluntary after-tax solo 401k funds out of the plan to another retirement account, like an IRA, such as a Roth IRA. So that voluntary after-tax solo 401k funds, that's going to refer to really what people call the mega backdoor Roth solo 401k. Because when you make mega backdoor Roth solo 401k contributions, you're really making voluntary after-tax solo 401k contributions. And those voluntary after-tax solo 401k funds can be transferred out of the plan to a Roth IRA. So that's our second bullet here, right? Voluntary after-tax solo 401k funds to Fidelity Roth IRA, then from the Fidelity Roth IRA to a Fidelity Crypto Roth IRA to invest in cryptocurrency. Now, anytime you transfer money to that Roth IRA, it can never be brought back to the solo 401k. So it's going to be out of the plan, right? Fidelity at this point doesn't support accounts to invest in crypto directly that are opened up under the name of a third-party plan. But this would be a way for someone that has voluntary after-tax solo 401k funds in their solo 401k to transfer those out of the plan to a Roth IRA, brokerage at Fidelity, and then to a crypto Roth IRA at Fidelity to invest in crypto. So it's got to be a cash transfer. So you can't transfer cryptocurrency that you have in your solo 401k over to one of these crypto Roth IRAs at Fidelity. So it's cash transfer only. We talked about the state limitations, right? Fidelity claims that they're trying to expand that list, but it is limited to a certain number of states currently today. You can find the updated list on Fidelity's website. As we talked about in the prior slide, no personal crypto wallet. So the cryptocurrency needs to be stored with Fidelity. Now they are storing it in cold storage, right? They talk about how it's institutional grade on their website. It's held with an entity called Fidelity Digital Assets. But that would be another consideration for our customers, because some of our customers want to be able to store their cryptocurrency on their own private wallet. So those would be the top considerations for those that are interested in the Fidelity crypto IRA offering and how it might pertain to solo 401k account holders. If you found today's video helpful, please like. That helps us to get the word out to other solopreneurs, to other self-employed individuals, other freelancers just like you who might find it helpful, right? They might be looking to invest their retirement money in cryptocurrency, and this could be an option for them. Now, if you also subscribe, then you'll get notifications of when we go live. We go live twice a day that allow you to come and ask questions, etc. So now let's turn to the questions that are being chatted up. Thank you so much for bringing the good questions. We do appreciate it. All right, I'm filling out your 5,500 questionnaire. Question 12 asks for amount of employee contributions made in 2024 only. To clarify, does this include contributions that were for 2023 but done in 2024? So under those 5,500 EZ instructions, essentially you have options, right? The key is to be consistent. In other words, one option is to report contributions made to the plan on a cash basis. In other words, whatever was deposited during the applicable year. So whatever was deposited in 2024, regardless if it was made for 2024 or for 2023. And that's what most people do. They report on that questionnaire contributions that were actually deposited in 2024, regardless of what year they were contributed for, because that way the account statements will be consistent with what's reported on the 5,500 EZ. Now, the instructions do give you the option to take an accrual basis. In other words, you only report on the 5,500 EZ what was contributed for that year, even if it was deposited in a different year, because of course, under the solo 401k rules, you can contribute after the end of the year, anytime up until the business tax return deadline, including any timely filed extension. But again, to be clear, what most folks do is they do that cash basis, whatever was actually deposited during that applicable year, regardless of what year it happened to be contributed for. Hopefully that makes sense. If the after-tax contributions get transferred out to a Roth IRA, would these assets be included in the Form 5500 or are they out of the plan? Well, it depends, right? Were they transferred out of the plan before the end of the year? If yes, then it's not going to be considered for purposes of determining the value of the plan, right? Because the 5500 EZ reports the value of the plan as of the end of the year. So if assets were transferred out before the end of the year, then those assets are not going to be counted. They're not going to be effectively reported on that 5500 EZ. Hopefully that helps. I'm completing the mega backdoor Roth for the first time. I've made my 2024 after-tax contribution and I need to decide between Roth IRA and Roth 401k. I'm 39 and won't need the money in the next 5 years. I don't do real estate, crypto, or other unusual investments, just mutual funds, ETFs. Is there a difference between the two accounts for me? Which is more popular? Do you recommend in general? Well, we have folks that go both ways, right? We don't recommend anything in particular. We just educate people on the considerations. So if folks want to be able to invest in alternative investments, which I recognize you don't, keeping the money in the Roth 401k will preserve the ability to make those alternative investments. Also, people will keep money in the Roth 401k if they think they might want to use that to justify a 401k loan, because that'll count towards your account balance. You could take that as a solo 401k loan, even from that Roth account. So the ability to invest in alternative investments, which you technically could do through a Roth IRA, but it's going to be more complicated. It wouldn't just be a regular Roth IRA like at Fidelity or Schwab, because that's going to be limited to brokerage type investments, as well as the ability to take a 401k loan, right? Because you can't take a loan from any type of IRA, including a Roth IRA. Now, considerations to transfer to a Roth IRA, typically it's going to boil down to someone may just be happy with their Roth IRA, the performance, and they just want to accumulate more funds in that Roth IRA just to grow it as much as possible. So that would be a reason typically why folks would decide to transfer out of the solo 401k to a Roth IRA. right? Coupled with the fact that they're not interested in those other features, right? Like alternative investments or the ability to take a solo 401k loan. Great question, though. That's a very good question. Thanks for bringing it. All right, next question. If I understand correctly, if I have a day job with a state that sponsors me with 401k and 403b, and I max out all of those, am I still eligible to max out my solo 401k via an after-tax to solo 401k Roth, providing I have the income? Also, if I'm age 57, what's the maximum I can contribute with an after-tax to a Roth solo 401k? Good question. So first of all, you have to consider the multiple plan rules. So your ability to make voluntary after-tax solo 401k contributions is not reduced by contributions made to a day job 401k plan, but it is reduced by contributions made to a 403b, right? So you've got that 403b exception. So typically, the general rule is that contributions made to another plan sponsored by an unrelated employer, like a W-2 day job employer, those day job 401k contributions don't reduce one's ability to make voluntary after-tax contributions because that voluntary after-tax contribution limit applies at the plan level. But the exception to that general rule is the 403b exception. So all contributions made to the 403b, whether employee or by the employer, together with any contributions that you want to make to the solo 401k, cannot exceed the overall limit. So that's a consideration, is the 403b exception. Now, in terms of the catch-up contribution rules, right, because you're age 57 or older, you're going to be able to make a catch-up contribution of $7,500. But if you made that catch-up contribution, it's not because you said you maxed it out to your day job plans. If you made that catch-up contribution to your day job plan, you can't make it to the solo 401k. You can only make it once, right? So if you make it to the day job, you can't also make it to the solo. But if you hadn't made that catch-up contribution to your day job plan, yes, you could make it to the solo, but you wouldn't make it as an after-tax contribution. Catch-up contributions are a type of employee contribution. So they're either going to be made as a pre-tax solo 401k contribution or a Roth solo 401k contribution. So you'd make it directly to the Roth solo 401k if your goal is to make Roth contributions. And then you can make additional after-tax contributions, right, subject to that 403b exception and your self-employment income, make additional after-tax contributions directly to the after-tax account, and then move those over to the Roth solo 401k. No, contributions to a 457 governmental plan, those are not relevant. They don't reduce one's ability to make contributions to a solo 401k. So they're not aggregated. Follow up to the 5500 easy questionnaire. This says employee contributions made in 2024 only. Do we include employer? So you're going to include those employer on a separate line in the questionnaire, a separate question in the questionnaire, because they're broken out in the 5500 easy, they're itemized. Assuming I won't need a loan, I don't see a benefit to either then. In that case, most folks a lot of times would go to a Roth IRA. Again, we're neutral, but I would guess in that situation, if the person is not interested in those Roth solo 401k features, they would probably just transfer to a Roth IRA. Now, keep in mind, you're going to want to submit the form on our website. You can access it at mysolo401k.net/forms. That's how we capture the information we need to prepare the 1099-R, because regardless of whether it's going from an after-tax solo 401k to a Roth solo 401k or from an after-tax solo 401k to a Roth IRA, it's still going to need to be reported on a Form 1099-R, and we handle that as an optional free service for our customers. Okay, well, great questions today. We do appreciate it. Thanks so much for the great participation, the good questions. Again, if you found this to be helpful, please like. It helps us to get the word out to other entrepreneurs just like you. Please share if there's someone that you think that might find it relevant. Please subscribe so you can continue to join our sessions and ask questions, hear what other folks are asking. But all the best. We'll be back next week with our daily webinar series. All the best, everyone. Take care. Thank you.